Yep. I'm just going to hit it on pause, and then I'm going to screen share to get us going here. Screen share. So many buttons. Okay. Get you back. Okay, you're on my side screen. So if you want to jump in, small group, best to be off mic, interact naturally. If I miss you for some reason because you're on the side screen, you raise your hand, jump in, find a way, because the whole idea is we're experience and share, right? To bring each other along, compress time to get the outcomes you want in your life. But covered lots of ground. We got the vivid vision of your destination, the household income to freedom levels, still defining destination. Then last week we worked on, how do you do asset protection so that you safeguard what you have, and maybe household accounting. There's lots of stuff going on. How do you get to have visibility on that like you might have in your business? So today we're going to dive into the financial resources needed, on the Freedom Platform, the section right here. And I'm going to focus on lots of things you probably already know. So we're going to focus on at least maybe two new topics, new to some, familiar to other, but focus on the new things to create options where you have, you create your flight plan to your destination, you have more options versus fewer. And if Stacy's here, I asked Wade to kind of weigh in and share some of the family bank stuff. So we'll come to that part. I'll turn the mic over to him, let him share some insights about family banks since he's the expert in it. I'm the guy who's still trying to figure out what I want to do. And then I want to talk about crypto, something that's coming up, but we'll do the overview here. So just to kind of take it, for me, the Freedom the reason why I created the Freedom Platform, we had it on the business side, growth, CFO, business building, something like this, but adapted for business building, clarity. It works. I can have team members and clients anywhere in the world. It works. Then my personal life was like, man, there's things I've heard about. There's things I heard about. I know I should be doing, but then 3 years later, I haven't done it. And so I created the same thing on the life flight plan to help people like me follow through from idea to action. And my habit every day is I log into the platform and I set my priorities. So I know, the vision. I can see the dashboard on the numbers of where I'm at from any date that I select. But I really focus on what action am I taking today. And normally 1, 2, or 3 things at the most. I know I'm not going to do 10 things today, right? There might be 10, like this noise, emails, things that come up, but 10 real action, I'm not going to do it. So if there's one action I take today to follow through on my life or my business, probably a pretty good day. So I'm sharing with you my habit that made the difference between doing it versus not doing it. I work in the platform. I set my priorities here. I might look at, this is the heat map on my life. I might look at and kind of reflect where are the gaps, where are the opportunities, but I probably don't do that every day. I do that at least every quarter. I want to reset the next 90-day sprint. And then I get real focused on, the project management. What action, if we do this, I can see like my accountant, if I want to look at what is he doing, where is he taking action to make sure that we're aligned, I can do that. I can also do the same thing with, just, what's on the table for me, right? So it's getting crystal clear, right? Or I can look at everything. And my accountant can only see things that I give him permission to see. He can't, my accountant probably doesn't need to see my bucket list, right? I don't need to see my bucket list. Who knows what's going on in there, right? So my bucket list, privacy, that kind of thing. And then there's recurring tasks. Like the accountant has lots of things. This would make me crazy to look at, but that's what the accountant does, right? To keep everything straight. So just kind of sharing the habit I developed that made the difference between, going to an event, learning about something, and following through versus not following through. Okay, any thoughts about that so far? You guys, right? Has anybody broken the ice and started doing something like that, setting tasks up, or is it still anybody still a little bit removed? It's a big shift going from how we normally work to something like this. So I'm gonna keep putting it out there. Okay, from a task standpoint, like there's a checklist in your PM, showing all the different things we did. If you're done, you click it off. If you're not going to do it, click it off, or you can make an assignment. You click on it, edit. You can assign it to yourself or someone on the team. Ben, you're in my success team, and then set dates. Right? You can do anything here. You can make comments and notes to yourself. You can link files. You can share it to somebody else, or you can send a message to somebody else. But all the work stays inside this task in the platform, so that it's instead of going between emails and documents, it's all right here. Okay. So I'm beating the drum on the platform. Right. That's what I do, and my life has gotten pretty good. You know, Isaac, you're like this. Isaac told me a few weeks ago. Oh, he said, he said, Kirk, you can sell, but other people can sell better. Right? I think, and it couldn't be more accurate. And so I wasn't born to be a salesperson. So I'm on path that I'm on path to hire a salesperson full time doing that. And it frees me up to do this kind of stuff, like the stuff I love to do, bringing people along, collaborating, meeting up just to enjoy, recreation together. I took my work week to go from what it is now, like 50 hours a week, down to like 20, and I'm gonna limit uh, what time I'm available, so I'm available to go do stuff in real life with real people, including business owners, right? But that's literally from these discussions, right? Otherwise, I'd be working like a factory worker to the very end. Because I'm wired that way. You want more, you work more active hours, right? Is anybody else is it just me? Right? So yeah, yeah. I mean, we're wired that way, but those insights, something like what Isaac said, like, well, how about I take action? In my business, there's literally a task. I got 2 hires going on, and I'm going to pass the torch, right? My business flight plan. So are you guys this useful? The collaboration, are you useful to you? Good stuff, yeah.
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 Otherwise, isolation. I'd be working like I'd be 70 years old, working like a factory worker, all broke, body not working, brain dead, right? Trying to, at one point in time, that made sense, right? We were factory workers, but not anymore. Especially this AI stuff that's coming out. It's a different. I think it's a different period of human existence that's going on. Okay, so today let's focus on financial resources needed. Okay, I'm I'm going to start with an understanding, a belief, an assumption that probably household income. People work jobs in household income, and then a lot of us have businesses. That's how we do our household income. Probably some people at least know about real estate, whether it's the right type of investment for them or not. Uh, Probably most of us are in public investments, right? 401k, mutual funds. Does anybody do day trading? Like you're picking individual stocks? Anybody doing that kind of stuff? Rob, are you doing day trading?
I don't consider it day trading, but sure, individual stocks.
Yeah, individual stocks. Yeah, day trading is a little more active. You could
Yeah.
have your own portfolio. Yeah. Um, but probably most know about that. Probably most are active in public investments somewhere. Um, Good clarification. Day trading is something different, and it tells you where my mind
But
is
the
at.
theory is that you're out on the same day when you're day trading. You don't keep any positions overnight.
Yeah, you're looking for the ticks and arbitrage and that kind of stuff. That's really active, which is for me, I would find no peace in that if I had to be watching the market every minute. Does anybody have private, other than your businesses, does anybody make private investments in other businesses like venture capital or private equity? You get some of that? Yeah. Rob, well, you and I had a great discussion a couple weeks ago about that stuff, right?
Yeah.
I decided for me, not for me, right? I got my own private businesses and all my clients are private businesses. I got enough going on in private business,
That's
right?
good.
Yeah. Does anybody else have any experience in private investments that they want to share for the good of the group? Rob, you got a story you're not telling?
Oh, okay. Oh, sure. Yeah, I didn't want to the capitalized side. So I've probably done a bundle over the years, and so many of them. It's funny. I don't know if anybody here listens to the All In podcast, but Jason Kalinakis is one of the four that's on that, and I think he made a 25K investment in Uber and another company, both paying out more than 100 million. And these are early kind of probably either friends and family or seed capital era investments that he made. Anyway, I've done several of those like 25K kind of investments, and most of them go to zero. I mean, just about all of them go to zero. And the other thing, and this is what I was waxing out about with Kirk, is you've got to be prepared for like 10 years of almost silence before you find out what's going to happen. It could be anywhere from 5 to 10 years. And it's just not worth. I mean, in my history at this point, it's like, I don't think it's worth it. I'm just, to if you have insight or access to real important opportunities, great. But the average schmo, investment club kind of choices, or even just individuals that come to you with ideas, it's just not worth the headache, I think, in my experience. So, and of course, I'm probably one of 1,000, like out of 1,000, maybe 1 to 10 do really well, and then everybody else is just kind of like dragged along. So, yeah, that's it. I'm just not a fan. I think you can just about go anywhere else, especially if you yourself are a business owner or in any way entrepreneurial. You can probably do more with your time and investments directly than just pushing your money around to other people. So that's it. Any opinions on that?
What do you guys, any thoughts there?
Well, I've been using a self-directed Roth IRA for a while, and been doing some different stuff. I've put some money into real estate with that, which, we tried renting out a place, which was, I honestly, the rental part didn't work out. We, basically broke even with what we had to put in for taxes and repairs and stuff like that. The only thing that we made money off of was it going up in value and then selling it. I've also invested in a steel distribution business and a clothing apparel line, which, I think to Rob's point, it's, you put the money in, but you wait and see where, it's going to take time. You just know that. I've also done some stuff with real estate syndication and oil and gas investing, but honestly, those mostly have been just for the tax benefits of it, as opposed to looking at any real substantial returns coming in on the back end. The oil and gas one's paying out some monthly, but again, you get into those things mostly for the long play as opposed to making the 25,000 that turns into 100 million deal. That's more of like winning the lottery to me.
Right. Exactly.
I
Oh,
think to Rob's point, like you have a lot more control over your own business. So like you're either investing in your own business, or you're like either, working for yourself or you're working for somebody else. You're either you're making your dreams come true, or you're making somebody else's dreams come true. And
yeah.
I'm working on making my dreams come true.
Yeah, with your own business, you're making the investments, you're building it, you're developing, you're doing stuff. And there would, like for the professional that's making that household income, they can do these things as well and build wealth, but it's a different, you're controlling your flight if you're the business owner, CEO. I was just talking to Rob randomly, and we got into this private investment stuff, and I was right there about to make a private investment, like where I got to evaluate and decide to go or no go. And so thanks
There,
to Rob, I had to tell the guy, I'll
there's
pass.
a couple of there's another option for that. There's a couple that I've looked into. I haven't gone into it yet, but instead of investing directly in a private investment, like my university has a private equity fund, and they pick the investments and they manage it, and you're not investing necessarily in one fund. You can invest into that. I also have a former colleague that started a thing called um, uh, I'm blanking on the name of it, but it's the same kind of thing where you can invest in it's Citizen Mint is what it's called. And so like they'll present you with projects, like he's building several apartment units around Seattle, and these investments are, I think the building development is probably something like 10 or 20 million. You invest like 25K, and they have financials drawn out. It's not as long a payout, Rob, as you're talking about. Their projects are targeting like a 5-year return, and they'll publish what the expected rate of return is and stuff. Haven't jumped into that. Both those ones, they all do require you to be like an accredited investor. You know, you have to have like $1 million in capital, basically, type of thing. But yeah, those are some options in between going straight into like an angel investing. Like, here you go, Ben. I hope your great, amazing idea works. Here's my 25K. Good luck. You know,
Yeah.
versus
Well,
something else.
yeah,
That's
that's
a
a
good
good.
point. There's an individual who runs a group here in Maryland, and I've been pointing to them a few times because they're very thoughtful and have a number of people examine every opportunity before they make a decision. So it's probably, if you're gonna go that way, I still think there's far more liquid ways to make investments if you're looking for alternatives. But if you really have to insist on getting into something like that very early stage stuff, I would recommend finding somebody that's got a pretty true proven track record and years of having success with these smaller businesses. So,
Yeah.
but yep, that's it.
Yeah, those are great. Like there's alternatives, right? It's not just one way, black and white. And somebody might shoot, a person may love just being in that environment with other investors talking about business, and they just want to do it. So being in that club, either like the direct investment or portfolio through something bigger. It could be if you like it, right? That might be. I like bike riding, but if you like that, do it. Have fun with it. So
Yeah, the private placement side of things, it's all over the board. Like we have a number of opportunities that, yeah, they're longer term. A lot of them have tax advantages as well, but you're probably going to be looking at averaging 15% on them, something like that. But yeah, you can always do the angel investor if you don't mind high risk, but it doesn't matter if they're experienced or not. Just had one launch and massive amount of experience. And so far it's been a complete flop. No, I'm
yeah,
sure I really think this will come back because the technology with it is absolutely insane, but it's not what was projected.
yeah, no,
So yeah, you can be ultra risky and you can find things that are still significantly more conservative on the private placement side of things. It's just need to find what's going to work for your situation.
it's
I
good.
had one kind of related. I think Jody mentioned that he's got a self-directed Roth IRA. I'm sure everybody here has heard the Peter Thiel story that, it's like $2,500 worth of PayPal stock. He had a self-directed IRA that's now,
Yeah,
through involving it again in Facebook and so on. It's worth something like $4 billion, $6 billion. And I would love to capitalize on that with the next business that's starting, try to put that. I first of all want to know if this is really for real, if anybody here has any experience with it. And secondly, if you could put like your new startup stock into it when you're not drawing a salary or anything, and so you can fit that Roth requirements, and then, or should I say, a small salary, and then kind of let it go on its own and see if that's reality. Because I mentioned it to somebody I know at Fisher Investments, and they were like, I don't know if that's really legal, but I don't think they get involved in that. So if anybody here directly has any experience with that, I'd love to talk about that. I don't know what category it fits under for today or previous days or future days, but I'm very curious to see if that works and if anybody's tried it.
Yeah, I'd have to look it up, but there was a guy I was listening to on a podcast who, and it's from a known entity of somebody I've worked with before, who he basically set up the business in his self-directed Roth IRA, or maybe it was a self-directed IRA, and there's a certain percentage that he was able to put in under the Roth IRA, and then another percentage that he could do kind of outside the business. So he was able to collect some income from it, but it was one of those like you got to know what you're doing kind of a deals. And I always caution people like don't try and get tricky with the self-directed Roth IRA stuff because the IRS has got some very, very specific rules around it. And if you even goof up some of that and it's, the IRS finds out it could wipe out your entire tax-free advantage from why you even started doing the Roth IRA. So, or self-directed Roth IRA.
hey,
Very good.
feel free to share in the WhatsApp group. We're not investment advisors. We're doing experience, peer-to-peer experience share. So if you see things that are interesting, feel free to drop those things because you never know. It might be the right option for somebody on the line basically, or somebody they know, but you never know, right? I like to stay aware of things, and I like to create options. You
Well,
never know what's right for you.
and I think one of the big things too is to figure out what is your objective for getting into it. Like for me, I don't do any oil or gas investing through my self-directed Roth IRA because you miss out on the tax advantages by doing that. So I only do oil and gas investing through income that I want to minimize down. And I'll just throw out there, as just one of the strategies I did. Um, I actually took out a second mortgage on my house, which of course freaked my wife out. But the reason I did it was because it doesn't come up as taxable income. But so when you take that money and you invest it in an oil and gas investment, now you're getting an 85 to 92%, just based off of how the IRS and how the government views oil and gas investing. Same, and there's similar stuff with real estate syndication as well. Um, but so I didn't have taxable income, but I get this huge tax break, and it gave me back basically all the money that the government had held from my taxes back when I was with the government, working as a government employee. So um, understanding your objectives in that is important also.
And a portfolio approach across the board. Like I wouldn't. I see people doing Hail Marys like in the crypto space. Like, man, like okay, right? That's going to be interesting. Okay, precious metal. Let's kind of covering some of the basics here. Gold, platinum, that kind of stuff. Does anybody invest in like gold, like in your house? You got bars of gold like Fort Knox. Anybody do that? Or stored somewhere else, right? There's
I know somebody that used to trade them, and they would take photographs of everything that was both received and shipped, and filming them while they were weighing, just all kinds of. It's a crazy little field, but
yeah, they're actually in it.
yeah,
Yeah,
we have precious metals or gold and crypto managed by a financial advisor. That actually came up this year with how do you feel about putting a percentage in that direction? It's like sure, yeah.
yeah.
So and they're pretty much, I don't know. I think Jeff was in the group. I think your crypto guy, but I think, right now people look at Bitcoin and gold as analogous
Yeah.
ways to kind of fend off any wild times. So just
And there's definitely differences. Like the for the families I'm a trustee on, the different families, we these are significant portfolios. We'll hold like 5% in precious metals as it's kind of a hedge if things are going south. You still got basically currency, gold, platinum, that kind of stuff. But we limit it to the 5%. And that seems to work. There was lots of discussion coming into this year whether it should be more, that kind of because the sky is falling, right? Kind of stuff. That's a classic reference to a book called Chicken Little, right? You can tell what my reading level is. Um, it could be worthwhile. For me, like pros and cons. You can definitely hold precious metals on paper, right? Like you do stocks, everything else. And for whatever reason, the way I'm wired, if I'm getting gold, that's like my apocalypse scenario kind of stuff. I want to have it bars in my house, and then you have problems that you got to secure it, or you can keep it in. I think there's like I don't know, like London, New York. There's certain places you can keep it. I saw an article that actually Jeff posted where it showed that Fort Knox has not been audited in like 51 years. The finance guy in me said, "Hey, if it hasn't been like inventoried in 51 years, I'm willing to bet there's something not there, something missing. I have a hard time believing
empty
it.
shelves.
Right? Can you
What, you
imagine
think there's a bar missing?
yeah,
Right.
just a
Or
couple.
1,000?
Yeah, maybe it's the ones I have in my house. I used to be at Fort Knox with the Army, right? We got an extra box here, and I'm joking because this is going to be published, but Jesus, man, why wouldn't you audit that every year? I mean, or like inventory, like,
Yeah.
but
Got to
imagine if you
check in
didn't,
the middle of that pallet if there's some styrofoam blocks in the middle.
yeah, some lead. Just
Yeah.
keep the weight. Can you imagine if you didn't inventory your stores or warehouses for 51
Yeah,
years?
what's this bottle of gold spray paint sitting here doing back here?
Oh,
Yeah,
well, we
just
got
like to your point there, kind of on precious metals. We do that for a lot of clients, but we don't recommend bars. because we use it more for yeah, it's a like insurance, like on your portfolio generally. But in an apocalyptic situation, um, having actual coins that a person knows a value of them and an actual weight is a lot easier to transact business with if you were to find yourself in a situation than with bars.
And
So that's why when we talk precious metals, that's generally the direction that we go.
yeah, it's a hedge, it's counter cycle, right? When everything's going to hell, it goes up kind of stuff.
Yep.
It's a pretty like non-realistic scenario. Like things are going so bad, I'm gonna start trading in gold coins and walking around town with gold coins. I probably wouldn't last 5 minutes. I mean, look, the
Has anyone
bank.
ever has anyone ever heard of Connor Boyack?
I have not.
Raise your hands, anyone? He's a major proponent of the Constitution, and he's written a series called The Tuttle Twins that summarizes key financial scenarios in our economy, like the story of a pencil and how it's made and the value of capitalism, being able to source things from all over the world. And like The Creature of Jekyll Island, have you guys ever heard of that book
Oh,
about the
oh,
Federal Reserve?
oh yeah.
Yeah. He's got a nice summary of that that's palatable to kids. There's some graphic imagery to that. It's turned into a whole cartoon type series as well on Angel Studios, if anyone's come across Angel Studios. Extremely well done and very poignant in terms of like how our economy works and how to be a better thinker than just a follower of ideas. Well, along with all of this stuff, they've launched a thing called a gold back. It's literally a dollar bill type thing, but this is a thousandth of a troy ounce of gold. These are starting to gain a little bit of traction statewide in different states. Some coin dealers will start to have these on stock as something that's actually transactable. To Stacy's point, having something that's actually useful if there is that apocalyptic situation.
Oh, interesting. Very interesting. And that's a good book to post the link to in the WhatsApp group, the Jekyll Island. It's really like, oh my God, right? And no wonder, right?
Yeah.
Good stuff. Because the reality is reality, whether we see it or blind to it. So might as well see it, and to make better decisions. So that's a good kind of. I want to do the lead up, the family bank, and then I'll turn the mic over to Wade and Stacy. You might want to weigh in as well, just to, the what and the why. The family bank is something that's new to me. I mean, I learned about it maybe 2 years ago, 3 years ago. I'm still trying to get my hand around it, how it fits, so I can take action and do it. That's why it's my third priority. I'm in the learning phase, talking to smart people. And figure out how to do it, and then financial resources to fund it, that kind of thing. But it's my third priority of what I'm wrestling with. And to set the stage here, you think about most households. Certainly, I can relate to my household. There's with a horse, it's not a horse. You might have a horse, but I don't. With a house, I have a mortgage. Make a payment every month. A big part of the payment is interest expense, not the principal. And so, according to AI, 5 to 10% of household income is purely interest expense, and that's how the banks get rich, right? The money goes to them, and then at certain stages of life, it's hard to get a loan. You go to the bank, and whatever you're doing, it could be house, car, education, whatever it is. Hopefully, not consumption. That's not a good reason to take debt, in my view. But if it's an asset, leverage, lifestyle of the house. In my view, I value that, so I took debt to buy a house. But roughly 5 to 10% is purely interest expense, not principal to pay down the loan. And at different stages of life, people get denied for loans from the bank that could be helpful in one way or another. So the family bank is a way of recapturing that, I don't know, interest income. Instead of making the banks rich, you can actually recapture it for your family and, build this asset that kind of changes dynamic. It's probably, I'd be interested in Wade and Stacy. Is that beneficial to the person who starts it, or is that more of a future generation thing? Is kind of how to think about this. Before I pass the torch, has anybody heard about the family bank before Besides, I know Wade has, pretty Stacy. You guys heard about it? Okay. Does anybody have one set up? Yeah, it's something I'm still wrestling with. I got my asset protection set up. I got my household accounting set up. I'm weak. I'm weak on the like insurance. My insurance coverage is very fragmented. I'm sure there's holes in it. Probably lapsed already, right? And it's expired and something I
Family
have.
bank the same as family office, Kurt?
No,
No.
no.
Okay, then I definitely don't have one.
Yeah, family office is more like managing CPAs and lawyers managing the legal privacy, managing assets kind of stuff. Family bank is something different, and I'm gonna let the experts define the what and the why. Um, so for me, I'm kind of on that path where I got asset protection set up, legal privacy, all that. My insurance coverage is with the properties, and my wife and I, it's like, it's all probably some holes there. So I got to, this year figure out what's going on, and then the family bank is somewhere in the mix. So Wade, is this a good time where I can pass the torch to you?
Yeah, sure.
And
Let me go ahead and screen share here. You'll have to allow that.
While he's doing that, Kirk, I'm in the same boat with you. I haven't done the insurance part. I listened to the podcast thing that
Hmm.
you had. And, Kirk, you mentioned the way that the insurance interacts with the family bank type of scenario. I didn't quite get it. Way to listen to your podcast. It made a lot of sense. But I've been doing the family bank just with keeping assets in the bank and making loans out to my kids and then paying back themselves. And that, a lot of the mechanics of the family bank we're doing, but haven't wasn't keyed into the layer of using an insurance instrument, on the backing it. So I'll be excited to hear
Yeah, cool.
about that.
I like to talk to it primarily as a
wait,
strategy first.
Wade, do you have the control?
I do.
Okay, good. Okay.
Yeah. So you should have a whiteboard pop up.
So, just to pause for a moment. So Ben, you saw a need to do this interfamily stuff with family assets, and you did it just manually. So that speaks to there's a why,
Yeah.
and maybe there's some good options to do it. So okay. So with that, so Wade definitely has expertise. Stacey, I think you're in this realm as well, and everybody else feel free to chime in. But this is something that was very new to me, probably less than 2 years ago. Seemed like
And
200
you may
years.
hear about this concept with other language, infinite banking, cash flow banking, um, being your own bank, banking on yourself. And the more common term today, which I prefer, is the family bank because we're looking at both beneficial strategy of our own day-to-day money management, but also the next generation and beyond, if that's something that's important to you, to be able to transfer effectively, tax efficiently, cash to that next generation without having to sell off assets. So usually at wealth transfer, if you've got businesses and real estate, you may exceed a threshold, which today is pretty substantial. It's $13 million per person. And if you exceed that threshold of assets, then it becomes taxable for amounts that are above that. And then you may have a big 40% estate tax on that portion. And the liquidity that comes in from having a life insurance product in place that's permanent can be really helpful for those in that situation. Maybe the majority of us aren't going to be there. I don't know. In fact, I just got notice today they may repeal completely the estate tax. So that may not be as important. But what I do want to get across, what we're seeing on the page here is what does a bank do effectively? Banks do four things. They gather money and protect it. That's their primary responsibility to us is to make it protected and accessible. That's our deposits into the bank. And then they have to invest it in order to be profitable. And that's what they do in terms of loans. They take the money that we've deposited, they lend it out. In fact, according to the Federal Reserve and the tax laws and so forth around it, they can lend up to 9 times what's on deposit. In some banks, 40 times what's on deposit. They get to create money out of thin air and make ridiculous amounts of money through infinite returns because they don't actually have anything backing it up as collateral themselves. And then they have to get it back, which is the principal portion. They got to get it back with growth. That's like the four main things that banks do extremely well. Extremely efficient at it. Like they totally incentivize us to give up our money and give it to them as quickly as possible through direct deposits. We don't even touch our money anymore. And it just transacts as digits on bank account balances back and forth and back and forth. So we've kind of lost touch overall with what money is. And there's kind of a general, I've been at this 20 years talking about money. I spent 4 years in banking, 2009, I got life insurance license, and I've been both a specialist in the wealth building, wealth transfer, estate planning type conversations with clients ever since. And what I find is a lot of people are kind of scared around money. They don't really understand the basic principles of how it functions. And I think this is really helpful to understand that if we can think of ourselves and our own financial resources. Who was it? Was it Jody? No, Ben. Ben, yeah, Ben Linford,
Yeah.
you were talking about this. So if we have our own money pool here, like what banks have, whether like just remove life insurance for a second from the entire conversation, just think of this conceptually. We've got to get money going in on a regular basis. Our cash flow. So there's really three pillars to cash flow. You've got, sorry, three pillars to wealth. The cash flow piece is what generates savings, which then can be utilized to acquire assets. But then, like we talked about last time, there's this whole protection component that we often overlook. We have gaps, maybe we misunderstand it, we don't appreciate it. And so we got to create the savings component from our cash flow to fund our money pool, which then can buy assets. So we might do simple things like a car purchase, and we borrow money from the bank to get the car, and they get the principal and interest back. And then we might buy a house, and so we borrow money to get a house. The bank is lending that money out, and they're getting the growth plus the principal back. And we may do business transactions, and banks are extremely good at this whole process. And so the concept here is we want to look what banks do and do what they do, not what they tell us to do. Because banks tell us to give them our money and hold on to it as long as possible and not put it to work so that they can put it to work. But if we follow what they do, we're going to start to go, oh, wait a second, they have a really good strategy. Let's see how we can mimic that as much as possible. So, Benjamin, amazing that you're doing that already with just your bank account balance. Now, banks do not lend money to anyone at any time for any purpose. They're extremely careful about that, aren't they?
Hell
Like,
yes.
it's like
Okay.
onerous to get a bank loan. Almost at any level. But again, I was in banking for 4 years. I was at the retail side. I was doing loan applications with people. And if you met a certain criteria, what they called the underwriting box, you were automatically approved. But if you were anything outside of that, if you're an entrepreneur and you have to provide tax returns and you're a little bit outside their box, it becomes onerous. And there's at least these four criteria: credit score, an income verification, tax returns, and a debt to income ratio that's looked at before some terms can be offered, which includes the interest rate, the length, and whatever other collateral may be required. Well, I wrote it, but I didn't. What the heck? My screen just stopped working. So collateral, it may require a lien against your house, your car, your business assets, etc. So because of this very successful model, we talked about private investments just a minute ago. Most of us don't have clear criteria for how to go about making those investments. The purpose behind it. Is it a tax strategy? Is it a long-term investment strategy? Is it a short-term investment strategy? And do we know the people involved? And do we know really what the true risks are associated with those things? And so we end up in a pretty uh, consistently losing position in those investments. It's been my experience personally with some of the ones I'm in, as well as colleagues and clients. It's kind of painful. And so I want to share with you guys a model that we've identified. I work with a company called Paradigm Life, who's the brokerage where we do the life insurance piece of the family bank strategy to enhance the overall effectiveness of it. And this hierarchy of wealth is kind of based off the hierarchy of needs that Abraham Maslow, the famous psychologist, brought up, where we need psychological safety, we need physical safety, we need love and affection, we need food, water, shelter, before we can really start to focus on doing things outside of ourselves and our community, starting to specialize in things, and then ultimately seeking our life's purpose. Monetarily, we all have a similar experience. So this base tier, the foundation, is where we create certainty. It's where bank account balances, CDs, municipal bonds, maybe treasuries, whole life insurance cash value. That's where our safe money is stored. It's not an investment tier, it's where we store money. And that's where we call ourselves, or call this, the family bank fits within this tier. And the company Paradigm Life, we've nicknamed the use of life insurance as a wealth maximization account, a place where we store money that's got a ton of really interesting benefits. And Stacey, if you want to add anything to this, you're certainly welcome to. But life insurance,
I
why?
have questions about this based on your podcast, if I was understanding right, like I set up the 401k plan for a business so that employees could take loans against their own 401k
Yeah.
and pay themselves back with interest. So, that 401k assets can be invested. They can only borrow up to 50% of the amount of the 401k. I'm wondering if on the family bank, if I heard you right about the insurance asset, let's say I
Mhm.
had like, $1 million in assets in a bank account, can I put it into some sort of $1 million interest or value accruing insurance product and borrow against that full principal of $1 million? So basically like doubling or getting, let's say I take that $1 million and then I loan it to my kids for businesses and stuff and whatever, and they're paying themselves back with interest. Am I getting interest on the underlying assets invested in the insurance thing and the return from each of the family investments paying back
Yeah.
itself, or how's all that
Yeah,
working?
that's where we get an efficiency. So I like to talk about the family bank strategy as a concept first, because you can do this using a bank account and maybe a secured savings and borrow against that. You can you can use your 401k and borrow from it, not against it, but from it. You actually remove the funds from there, but no more than 50% and no more than 50,000 in total. So there's limitations there. If you have $1 million you want to put into something like a family bank strategy using life insurance as the asset to hold it within, there are restrictions in terms of how quickly we can get it in. That is one pretty significant drawback to this, is if you got $1 million, it's going to take us about 7 years to fund that in completely.
A whole life insurance.
Yeah, like if you
But
wanted
if we
just a
did
lump
that,
sum
if
to
it
fund it.
did that 7 years, you have $1 million allocated there. Are you able to borrow against that full million? Is what I guess what I'm wondering about.
Once it's in, yes. You can only borrow against what's been
What's
deposited
there? Yeah.
through the premiums you pay in
Yeah.
to the
So this year, if I put in 150,000, then I could borrow against the whole 150,000.
pretty
Is that
close.
right?
Pretty
Yeah.
close. So here's an actual illustration of how a policy works, a real life client who's 58. So it's going to be a little more, some of the numbers will change, but the percentages will be pretty close. So this of the 100,000 he's deposited,
Mhm.
70,000 of that's available year one. So about
What drives that?
70%.
Why? How's that determined what's available?
The insurance company determines that based on how you've designed the policy. So
Mhm.
we design it for as little cost as possible. Because in order to have life insurance, you have to buy life insurance, this death benefit over here, 1.7 million.
Mhm.
And a portion of that 100,000 pays for insurance. So
Uh-huh.
you acquire an asset that has a cost to it.
Mhm.
And so they can't give you 100% liquidity year one because they have some costs that have been incurred that they need to reserve for.
Mhm.
Okay. But notice by year seven, we've got 700,000 of total contribution and
Mhm.
717,000 of liquidity.
Yeah.
So the first couple of years is less liquidity.
Mhm.
Notice each year, 70,000 of released equity the first year, 81,000 of the second contribution, and then 98,000 of the third contribution. So they withhold in the first couple of years, but the third, fourth year, you're getting 100% of what you put in, plus the gains that are internal to the growth of the contract that are both guaranteed, plus some dividend growth. You're increasing your cash value by more than what you put in, and thereby we overcome those initial early years of less liquidity to the point where we have 100% and then significantly more than 100% as the
Yeah.
asset grows. Is that
Yes.
helping?
Yep.
Yeah, in this model, you put in for 12 years, then it's kind of running on its own. And so this kind of, I want to keep it at a level where kind of the what and why level.
Yeah.
Basically with this whole life insurance, you can structure in a way where you fund it. It gets to a certain point where it has a cash value that you can lend out. If you're lending, let's say your son or daughter, you're lending money to them to buy a house, buy a car. The idea is that they pay the fund back at market interest rates. Like if the car
Mhm.
interest rate is 10%, they're making the payment back, every month with that additional interest. So the the family bank is capturing that instead of a bank. Um, if you got a deadbeat son or daughter that just takes the money and runs, that's going to cause like a bank. It's going to cause whatever that thing.
So
Uh-huh.
I've got kind of an interesting situation that I'm doing for that now that I realize it. Like I set up an LLC for the family, and the LLC has investments in our business and whatnot. And everybody has a capital account of what they've contributed to it. And then, so let's say let's say son wants to borrow, 15K to get a car, lend it out. If he doesn't pay it back, his capital account gets reduced. And so that's how it would make it so that, that whole account, it's like if he doesn't pay it back, he just hurts himself. He doesn't hurt the whole group.
That's a good
Um,
mechanism. That's
Yeah.
very nice. I like that. Good mechanism. Hey, just respect time.
And I guess I didn't realize it. I think the way that I have it set up, Wade, is not necessarily that it's not just a cash account that's backing the family bank. It's the family assets by way of a LLC. So may or may not need the insurance backing, but the family asset, I guess, the businesses and stuff are hopefully, if they're succeeding, making positive returns. The interesting part of the insurance backer that you're talking about is it's building that cash value or that return.
Yeah, we build up an equity in here that's tax deferred, accessible tax free through the loan provision that's automatically there. There's a line of credit automatically against there. You can borrow against it for any time at any purpose. Sorry, at any time for any purpose. Takes 2 to 7 business days to take a loan against your policy. It's an unstructured loan, so you can repay it at any time frame that you want. It's an interest only accrual. The insurance company does in fact charge an interest rate, currently 5.3 with one of the companies I'm working with called Penn Mutual. It's close to that for many others that are mutual insurance companies. And so you can set up terms within the family as far as the timing of returning capital, whether it's a business investment or a car loan or education funding or some other thing that you're doing. And then
I
really
don't know
like you
if I
got to
heard
get
that
this
right.
though.
Does the insurance company charge interest when you borrow out? So are you losing some interest and you have to charge above that to make the spread, or you're yourself paying the interest back?
So you can let it accrue and negatively amortize onto a higher loan balance, or you can pay the interest out of pocket once a year at your policy anniversary. So
But
there
the
is an
interest, does
interest.
that go back into your cash value, or does that go to the insurance company?
It goes to the insurance company's general fund, which you borrowed from, and then you have guaranteed growth plus dividend growth that's accredited to your policy. So it's an indirect return back to your policy.
Okay. Yeah.
So you'll notice up here you've got 7.3%. This guy's in the 37% tax bracket, so he's earning the equivalent of 7.3 on this policy.
Yeah,
That's your before tax return, tax equivalent. So you'd have to be earning at least that in a savings account somewhere or an investment fund to net what this is doing. But often you won't have the death benefit coming along with those. You'd have to have term insurance. So anyway, there's a lot that we could talk about, but I know we're short on time.
Yeah, and you can really see like multi-generational. If somebody like me got something going, then assuming that my kids are coming along in a similar direction, you could really build a significant bank. I think the Rothschilds did that, didn't they? Wasn't that one of their
Rockefeller is the most famous family for
Rockefeller?
utilizing this as a wealth transfer tool and wealth preservation tool.
Yeah, he seems that things worked out okay with him.
Mhm.
Yeah, he made my university.
Did
Yeah.
he? Yeah. So good. It's an option, right? And it's not either or. It's a portfolio, kind of what things and what mix and what percent.
So think of this as the place alternative to a bank account where we store money, but has some pretty nice advantages in terms of storing it. Banks 0 to 2% versus 7% here, tax equivalent. It's going to net out to between 4.5 and 5 tax free consistently every single year without fail. It just does that. So it gives us certainty and it gives us liquidity and it gives us the death benefit protection so that if something does go awry in that structure you talked about, Benjamin, when you're lending money to family, if something goes awry and you lose money, at least at the end of your life, it's recovered to the family through the death benefit that's guaranteed to be there.
And it doesn't have the volatility of the market. Is that
It
correct?
has zero volatility.
So it's a different animal in the portfolio.
You can think of it like a bond, the bond portion of your portfolio, if you have a diversified portfolio.
Okay, so let's do this. We have a hard stop. I got to go teach, and they still let me do that at Georgetown. And so what we'll do, we'll pick up the fifth session. We'll pick up with cryptocurrency, kind of where that might fit or might not in anybody's given wealth plan. And then we'll go back to our spreadsheet to emphasize the portfolio, and then we'll do that fairly quickly in the conversation. And then I want to spend the rest on time. Like you got now you're living your life, your vivid vision, your bucket list, and you're protected from legal action and privacy, and the money's good. It's so passive, you sleep all day long. Want to make sure that you're like whatever, especially those that are actively working in their business. How do you get the time down to where you can breathe and you're doing your best thing? And we're going to talk about the law of the straight line to do that. And we'll go through the spreadsheet, work out some strategies, like the one that Isaac basically gave me, where somebody can do it better. That one, right? Because why not, right? Somebody can do it better, and so we'll do that. We'll do those two things. We'll finish the financial resources needed, kind of portfolio, so you have more options, and then we'll look at time, and then we'll talk about what can we keep doing to collaborate with each other, and bigger community network, do stuff together. Is that a good place to go with this? You guys good? Yep. I'll drop a video when I'm looking pretty. I'll drop a video about what we did last week to catch people up. Like Loretta wants the video and Gardu, so we'll do that and share resources. Because man, the world's moving fast. There's some good stuff out there. Even if you go to a great vacation spot, share it. Because why? I mean, you never know. Somebody might see that, and they want to go too. So they're gonna go. They'll go with you on your next vacation. Right. You have a tag along. Okay, good. You guys ever thumbs up? Rock and roll.
Thanks, Kirk.
Yep.
See you next week.
See you next week.
Thanks. You guys have a good week.
Thank you.
Yes.
Wade, thank you. Stacy, thank you. We need experts.
You're welcome.
Okay. See you soon.
Bye, guys.
Bye-bye.